Hi, everyone. Today we have a very special guest. We have Quincy Jones joining us today. How are you today, Quincy?
I'm doing just great, actually. Getting plenty of love on Twitter, so that's nice.
Thanks for joining us. I have some questions just about your perspective on what's going on in crypto and blockchain right now. And uh, one of the first questions I have is just the design of on-demand liquidity. Like, does that seem clunky to you versus working directly off the XRP ledger? And why would they work off of on-demand liquidity when they have the XRP ledger?
Yeah, actually, so it seems, at least from my understanding, here's kind of where things come into play. So there's certain risk with dealing with directly off of XRP, at least as of now. Mostly those risks are volatility. And you can say what you want about the volatility risk, but a lot of institutions don't really want to bring on the volatility risk, especially if it wasn't a risk before. Now, this is a risk now, but it's not always going to be a risk. It's only a risk now because of the high volatility. Presuming that we see a S-curve of adoption and more money in the space, obviously there will be a leveling out and the volatility will subside. But with that volatility there, it's a lot more advantageous for enterprise. It's a lot more advantageous for enterprise companies to be able to operate off of a structured liquidity pool, to where the risk is offset to whoever's managing the liquidity pool, while they're still able to get the same level of functionality out of using the technology.
Okay, cool. So there's been some conspiracies revolving around Ripple and the IMF. And from like a technical standpoint, how could the XRP ledger benefit the SDR?
Yeah, so it's actually quite interesting because the XRP ledger would actually be a perfect. Actually, let me mute my Twitter's going crazy again. Twitter, Instagram, and YouTube are just on a whole nother level now. But the XRP ledger would work great for the ESDR, just from your ability to issue assets onto it. And what I think is going to happen with the ESDR is it's really already a basket of currencies set up in a series of contract accounts that different, pretty sure governmental organizations and giant banks operate through the IMF to be able to move large sums of money. And basically, I believe that they could just use that same structured contract and pool of currencies structure on the XRP ledger without any issues, and be able to share that same representation of value in real time. And they have multiple ways of how they go about it now, but it's mostly, in the way I like to phrase it, is it's really no different than how we've been doing banking since the 70s and 80s. It's just the technology we use now is a little bit better, but not really more efficient. It's just more, let's say, it's more user friendly, but it doesn't necessarily mean it's more technologically. How should I put it? When it comes to the overall technological progression, it seems as if the banking sector, on top of just finances in general, have been primarily operated off of people rather than automations. So what you see a lot is in essentially everything else. You see, in the tech space or in certain industries, you see automation being everything. And in the banking space, a lot of it's really just been people, dealing with IOUs, dealing with, potential, a lot of it is really manual. And I think the biggest difference now, not only with the IMF and the ESDR, but just kind of in banking in general, is being able to have that level of automation, but really that level of standard to where everybody's operating off of the same template. Because kind of as of right now, and this is sort of a tech problem in general, but when people are dealing with two separate templates, both tech teams need to figure out how to get that to come together. Blockchain is great because if both of them are operating on the blockchain, then they already have that template already put into play, and then everything they can operate off of is able to continue operating. And they can very easily integrate with each other without actually really having to figure out what the other is using. But yeah, as for the ESDR, the properties in the XRP ledger already illustrate that it can issue assets under it in real time, and you'll be able to have that real-time settlement for ESDR payments among participants in the ESDR payment system.
So all the different currencies, they can issue it on the XRP ledger and kind of level off the
yeah. So one thing that I would like to say for the XRP ledger and the ESDR, I think you'll see currencies, but I think you're primarily going to see bonds and treasuries. And I think you're going to see them used just like regular currencies are in a, in a macro sense, like for billions of dollars. But I think the structure of how they structure that that unit of value is a little bit different than how we would structure just the typical currency. So I think it'll be sort of like using treasuries like cash in a sense, but real-time cash. As of where now it's sort of like a series of IOU contracts that get fulfilled over a period of hours, if not days, depending on how much money it may be and depending on what day of the week it is. I think this is just going to allow them to basically be able to have a set standard to programmatically do all these different things that they already do.
Cool, cool. So Chris Larson at one point said that he believed that crypto assets can prevent a financial collapse. Do you share the same opinion as him?
Yes, actually I do. And one of the biggest reasons why I do is the to move money throughout the financial system is really, really, really slow. And that's part of the reason why it's partially expensive for like basic transactions, even stuff like ATM fees. Just moving money in general is really, really slow. And there's a lot of risk with a lot of the parties that operate on it, mostly because one, they need to maintain liquidity. So they always need to have cash on hand to make payments. But two, because money moves so slow, it basically comes off to this risk of, well, we're able to take on debt and we're able to lend and we're able to do all these other things, but there's really no guarantee that any of the trades that we're making will come to fruition. Obviously, not everything goes well. So let's say even if they had an 80%, maybe even higher than that, 90% success rate for all of their dealings, trades, well, that also means that all that risk that they may have for things that may not to go through, they need to up the prices. Well, the thing that distributed ledger technology is able to offer is not only are they able to offer that instant liquidity, so you can offset all of that risk from basically having to hold on to a series of assets over a period of days, and also have to maintain those capital requirements for those assets over a period of days. But you could have that instant liquidity for all those payments that you may need. And it just comes down to the slower the payments become, the more and more of a problem of being able to pay your vendors, be able to pay your general business expenses. It's money that's coming in that hasn't gotten there yet that needs to be spent. And the slower that is, the more that piles up. And the reason why it could be a threat to the financial system is everyone could hypothetically have the money to continue operating. But if money moves so slow to where they're waiting on themselves to get paid from their client they're operating with so they can pay another client, and it keeps getting slower and slower, you're going to see someone break in that chain, and you'll see the whole chain start falling apart because people start going under from not being able to pay their bills. And liquidity doesn't solve this problem as a whole, because part of this problem is a debt problem too, but it does solve the problem of basically that infrastructure or institutional friction between all the different entities that interact with each other.
So they could essentially make the wheels spin without inflating away. So just it would be a better term for debt.
Yeah, I think it would be. And I think another thing too is with what you said about not inflating things away. I think it will also bring a lot of economic growth, because the velocity of money will now continue to speed up, which means more people can spend money, get paid, produce things, create things, and it basically it'll almost ramp up the economy, not to not to an absolute degree, but you'll see an overall uptick because of the new amount of liquidity added to the ecosystem.
Yeah, it's like the analogy with emails. It's like I never send a postcard, but I'm always sending emails back and forth. So it'd be the same thing with money. So I've noticed Consensus is involved with a lot of central banks, and I just want to know your thoughts on Ethereum forks, Ethereum. Like, where do you see them playing out in the next gen financial system?
So I think Ethereum's quite interesting, because I think Ethereum has two huge things going for it that I think people don't talk about enough. I mean, obviously they talk about how it's one of the first blockchains outside of Bitcoin to make it into the space. But one thing they also don't talk about is how dynamic the Ethereum community is. And I think one of the biggest things that Ethereum is going to have over every other crypto is all of those business dynamic needs that essentially don't really fit into a box. The entire Ethereum ecosystem and the participants in that ecosystem are very, very, very willing to be flexible with different types of needs. And you see this from moving from Ethereum to Ethereum 2.0. The mere fact that you're able to get everybody to all come together and to all agree on a subset of rules and an update. And they've done this multiple times, but I think, and obviously, the multiple times they've done this weren't for the greatest of reasons, usually due to a crisis. But the fact that they're able to get up and be mobile and be able to change on a dime, I think Ethereum as a whole is going to be able to do so many different things. And I think as a whole, from all the smart contract platforms, it'll probably have the most dynamic or the most fluid level of being able to conform to different markets. But I don't think it's going to be structured in the same way that everybody structures payments, because everybody looks at all the cryptocurrencies like they're all going to be payment tokens, and I don't think that's going to be the case. I think a lot of the native tokens on their blockchains will be payment tokens for their blockchains, but for the overall ecosystem and the overall payment and banking sector, I think there will generally be a handful of settlement tokens, and then Ethereum would have its ecosystem where you pay gas and you pay Ethereum to do all the different features and all the different things that you may want to get into. Now, for Ethereum as a whole, I think some of the interesting applications that can end up being built off of Ethereum, especially the ERC tokens, and especially being able to use the broader Ethereum ecosystem on top of the Ethereum virtual machine. I think it also has a robust economy of developers that are constantly finding business needs. And you see this with VeChain, and you see this with just so many of the other ERC tokens. And that's the thing. I guess the one thing that's sort of off about that is, since anybody could really make an ERC token, there are just so many of them, and a lot of them are kind of just there for the sake of being there. But there are a lot of interesting projects that are definitely going to make quite an impact. And I think Ethereum is one of the most dynamic blockchains when it comes to being able to change for business needs.
Yeah, they do have a big group of developers that prefer Ethereum, so I think that's one of their strengths. With their update to proof of stake, do you see proof of stake as kind of a means to become centralized over time with the largest stakeholders?
Yeah, so it's something that I'm actually kind of worried about. Now, one thing that, and I made a video about this, but one thing I didn't consider at the time is how the slight intricacies of the different proof of stake systems work. So a lot of the proof of stake systems acknowledge this problem, and they have different incentives to sort of counteract this problem. It seems like the biggest issue would mostly be a community issue of essentially monitoring the community to make sure that nobody's aggressively trying to consolidate the network. But it is something I am concerned about as a whole. I mean, don't get me wrong, you can go over your individual network or your individual token and talk about the different incentives to help prevent that, and that's all good. But it is a general concern of mine due to the general gist of how proof of stake is able to reward larger stakeholders as opposed to the smaller ones.
Yeah, so what about using Interledger in combination with Ethereum and settlement token? Does the XRP ledger easily talk to Ethereum, or is it really complicated to get the networks to talk?
So there are a handful of projects that do stuff like this to help get the networks to talk to each other. And there are different means of talking. So usually the general sense, people think of just settlements, and getting settlements to talk with each other isn't necessarily the hard part. It's mostly getting multiple enterprise technologies. So let's say you had a settlement platform like XRP, and let's say you had Ethereum and Algorand. The real intricacy would be, how do you get these two separate smart contract platforms to interoperate with each other's smart contracts while at the same time being able to keep track of a token that's not theirs? You see what I mean? Okay. I think that's where the real complexity comes into play. So if it comes to Ethereum being able to see that, something happened on XRP, or being able to, I don't doubt that somebody out there could create a smart contract on Ethereum that could do something like that. It's just that real intricacy of having that interoperability of multiple smart contract platforms in tandem with being able to communicate with broader liquidity tokens that aren't native to their own platforms.
So they just can't keep track of where the XRP went. So they could trigger the event, but after the event takes place, they would need to come back to the network and validate the transaction somehow.
Yeah, it's a so when it comes to payments, they could do something like that. It's just with the smart contracts, and each individual contract on each platform has their own attributes, and then you have to account for the attributes, and then both contracts have to keep track of the token that's on Algorand or on Corda or whatever to do something like that with settlements to sort of kind of try to keep track of off-chain settlements, at least to a certain degree. But it's the smart contracts that get really, really intricate because, like I said, you're dealing with two different technologies that need to be interoperable, that are potentially looking at other technologies to sync up with. And there are projects out there like that. I've seen quite a few projects out there that are trying to do stuff like that. I'm pretty sure that's one of the goals of Flare actually, is to be able to add interoperability like that. And XRP has hooks to try to add interoperability like that. And Corda has Corda Settler, and I'm pretty sure Ethereum has like a series of sets where you can try to get a certain level of interoperability. But yeah, the smart contracts being able to communicate with off-chain smart contracts that are also keeping track of off-chain tokens is, and that's like this is a billion, potentially $1 trillion problem, because what you're having is you're going to have these different silos of different technologies. So you have assets siloed over here, along with technology siloed over here, assets siloed over here, technology siloed over here. And if you can merge that with basically making that frictionless, not only with the payments, but with the software itself, it's almost like you could have an entire ocean of blockchain technology all interoperating with each other to create almost like a decentralized internet that's all interconnected.
Okay, I've seen a lot of projects, a lot of central banks working with Hyperledger, R3, Quorum. Like how
Hyperledger is a good one. Sorry about that.
No, that's all right. I was just asking, like, how would they work together, and like what unique solution is built from them working together?
Yeah, so the biggest unique solution for them working together is they all offer unique features that, like I would almost say all the I wouldn't say all, I guess, but a good portion of the tokens out there that have their own set of unique properties, although may have similar properties to other platforms, usually have something unique about them. So what ends up happening is if you want to get that level of interoperability between the two, or between multiples, and you wanted to use one for one particular use case because it works really, really well there, but another for another particular use case because it works really, really well there. And you got to remember, this is also a scaling problem. So you're not really looking in terms of just yourself. You also got to be looking in terms of people you're operating with. So if Billy's using this and Bob's using this, it's good for you to be able to use both and have that interoperability than it would be to have these two silos or having to pick one or whatever that may be. So there's also a scaling problem with this too, where you want to make sure that you're able to operate with everybody else and not necessarily have to worry about syncing everything up. And that's kind of like, that's really the entire tech world now. If you had two companies that wanted to sync up with each other, it's a huge tech like transfer and development to make sure the two softwares are, connecting with each other in the manner that the companies would like. And it's a huge, huge process. And being able to essentially kind of streamline that, or to streamline that, especially for our enterprise and production settings, especially in banking, finance, and anything of that like caliber, would be just like the biggest thing ever. Because like imagine it like this: imagine if all the banks are not only able to make payments with each other on one platform, but they're all able to run each other's software and almost be able to make integrations with each other's software without having to have these giant tech team integrations. It's almost like they can just build upon each other's technology on top of the same platform, or on top of multiple platforms that are able to integrate with each other.
So the Bank of England did a proof of concept with Ripple, and they talked a lot about artificial intelligence with blockchain technologies. What kind of future do you see with artificial intelligence intertwined with blockchain? What does that offer?
Yeah. So one thing that is actually kind of cool is, artificial intelligence and machine learning requires big data in order to really get any sort of result out of it, or at least to get a result in a timely manner. So with blockchain, you're constantly, all these blockchains are generating so much data all the time. So what does that mean as a whole when it comes to machine learning? Well, that means all of the different applications that you could think of that can run some form of analysis on those blockchains can use machine learning to essentially manage and process all of that data that's being produced on that blockchain, and potentially process that data in real time because it's an ongoing process. And it's so much data that it'd be perfect for the type of setting that machine learning may have. But you can take any sort of feature or any sort of application that you would like to build and be able to interoperate machine learning involved, due to the fact that you have such a wide scale of data. Even if it was something simple, like let's say you wanted to create an auditing application, and all it did was every single time a series of addresses that were meant to be audited got triggered or something, some function would run. Well, what if you just added a machine learning layer on top of that? Would not only take all the incoming data and evaluate that, but take all of that data and maybe even compare it with some other a silo data you may have for like fraud detection, or for maybe you want to do a comparison analysis between two clients and you want to make sure you're able to process a huge chunk of data almost even in real time, with like I said, with something like machine learning that could do something like to that degree. I don't know if that's a good example or not, but it's the big data portion of blockchain that really gives machine learning its legs for something like that.
Yeah, it gives a lot of data that I think central bankers could analyze the economy in real time and just see kind of how it's spending, and then in combination with CBDCs, they could put burn rates or inflation rates on the currency, or put a time decay on it. So
yeah, you'll see real time tax auditing. You'll see real time what's it called? Real time notarizing of official like documents. You'll see real time identity verifications. You'll see and real time auditing of that identity verification. So not only would you be able to see that identity, but you'd be able to see every place that identity went to and got verified at. So there's a lot that you can do. In terms,
do you think we're going to have like a dystopian future after everything's said and done?
I don't know how, like, it's one of those things where it's like the classic dystopian future of everything seems so great, there's no crime, and also nobody has any rights, like, but everything's supposed to be like all glitz and glam and like, but I mean, I don't think things are going to be as dire as like some of the crazy stuff you may see on Twitter. But I definitely do have my concerns of that slippery slope type of ordeal. It's sort of like that slippery slope of, I guess you could say, CBDCs and the adoption of distributed ledger technologies is sort of that same slippery slope of like how like the Patriot Act was for like trying to find like terrorism and trying to like really like go into like managing technology and managing data on a larger scale. And I think it's kind of like that 2.0, but the technology's better. It's faster, and it's woven into the economy, or it will be woven into the economy. So everything is real time, everything is instant, and everything's fast. I think that's the big thing, because everything else in technology has sped up and gotten better and better, while a lot of financial technology and a lot of just really, I guess you could say, I don't want to say cloud technology, but there's definitely been this crazy progression from this old traditional architecture of self-hosting, and there's sort of this weird mixture between like traditional architecture, cloud architecture, and blockchain, and things scale significantly faster in cloud and blockchain. So you're seeing this weird migration coming into play, but with all that said and done, I do think you're going to have just everything's going to be integrated with everything else. And I do think you're going to have a whole nother level of public to be involved. So sort of the way we look at public now is like, if you go out in public to like the public square, to the park, you're like in public. I think there's also going to be considered a digital public, sort of like how if you go on Twitter or something or social media, it's the digital public. But I think there's going to be more of a meta layer to that, where part of the digital public could be that you were at the town square and it's on the blockchain that can be auditable, type of, like, not exactly to that degree, but it almost redefines what digital public is outside of just you posting for yourself. You know what I mean? Like, could we potentially have it on the blockchain however many times people left and came into the country. And it's just, you know what I mean? Like it's an auditing tool of which you're able to, and don't get me wrong, like you could, check those IDs with, if they're on any sort of list or if they've got any, whatever, warrants, whatever it may be. But it's one of those things too, where it's like at what point do we question what's not being tracked? Because it seems as if everything is being tracked. And what's that relationship between public data and private data? Because I think that honestly may be not really a crisis, but it's going to be like a panicky sort of thing where people are going to go, wait a second, I don't want this out there. And I think it's going to spark a real conversation of what private and public data is going to look like.
Yeah, I went to Las Vegas. I got married in Las Vegas, and me and my wife were talking about a slot machine we really liked. When I log on to Facebook, they're giving me ads for the slot machine. Like I can download that game on my computer. So it's a bit creepy. But.
And you may see that exactly with something like that. You may see a lot of these advertiser companies say it's public data, and that's a real concern to have, because then it's like, well, what if I don't want this to be just out there? Even something as mundane as like what type of slot machine you're looking at, it becomes a little bit concerning of, well, it may not be a big deal in this context or this context, but how much data do you need to have on me before the public becomes private?
So you said that you solved one of Bearable Guy's riddles. I saw that on Twitter. Is there anything you can share about that with the riddle?
I mean, I was shit posting. I was just getting a rise out of people on Twitter. I wouldn't say I didn't solve anything. I've sort of dove into the riddles because I found them quite interesting. But yeah, I was kind of just teasing on Twitter. The only real riddle that I've sort of solved, or that I would claim to have solved, and actually I'm trying to figure out the best way to. I want to make a video about this where I write it out on the board so everyone can sort of just see it written out, and then I can sort of show my math on this too. But basically the Bitcoin scaling equation, and I want to write, like I had like a giant, like basically like a piece of paper with just scribbles on it, and I'm trying to just like make it clean. But if anything that I've solved, that's the only thing I'd claim, and I wouldn't even say I solved it. It's more of I'm trying to prove, and that's like not even really trying to prove. I'm just trying to illustrate it through the math to get people to understand the power consumption and scaling problem with proof of work. So I guess, yeah, that's the only thing, if you want to say, and that's thing, like I was sort of alluding to that too, but I was mostly just kind of just fooling around on Twitter.
Yeah, but do you think there's anything to Bearable Guy, or is he just like a troll, you think?
I have no idea. So I've spoken, so ever since everything's blown up and everything, I've actually spoken to some representatives at Zinfin, because they reached out, like my video, like my channel, and they're trying to do some like community outreach programs. So they're very aware of the space, and they were literally telling me that a lot of the stuff, and I hope this isn't going to be like popping anybody's bubble in the crypto space, because I know there's going to be a bunch of people that are a little salty, but a lot of the like images floating around over like the new financial system, or a lot of the stuff that people are sharing is a lot of nonsense. And it's kind of funny because they think it's hilarious. And like one of the documents I was saying that's supposed to be like a new financial document, he said that like he like found the person on Twitter that made it, and they like made it as like almost like a guess in the dark of what they think the financial system would be, and it kind of just ran like wildfire. So it's kind of like this, like I will say this. I think there are a lot of trolls out there, especially with a lot of the claim to be riddlers. But I will say I do believe that there is insider trading happening flat out in the open through a series of codes. But I don't think it's like, moon overnight type stuff. I think it's flat out insider trading. And there's so much nonsense around it to where it's like the perfect play. Like if people are thinking there's some grand conspiracy with secret codes all over the place, and you're trying to basically go, oh yeah, the price of this is going to go to this point, and send it to your friend, or not even send it, but just have it like posted out there in the public. It's kind of like the perfect play. And the only reason I say that is I've gone through some of the Mr. Pool like hashes, and I've gone through it's kind of like down the rabbit hole with some of the people's research on top of some of the stuff that the Zinfin ambassador told me. And it seems like there's something to be there. But like I said, it has really nothing to do with like overnight, or it really seems like price. And you can call that whatever you will, but it sounds like flat out insider trading, but someone's trying to be real clever about it.
Yeah, that would make sense to me actually. After you mentioned that, that does make a lot of sense. That it would be like a group of people communicating back and forth through code. So
Because one of those things too, because you have to prove it in court, and like, what are you going to do? You're going to pull up a bunch of Twitter posts of people going, "Oh, like it's kind of the perfect." I'm not saying this is the case. I'm saying that's what I think, because it really sounds like the perfect play to be insider trading out in the open, and it sounds so ridiculous that, not really ridiculous, but the commotion around it is so ridiculous, and it's kind of caught up in the idea of conspiracy theory that nobody would ever even think twice to even go like, if we crack these, would we actually find something, or is it just nonsense? Where, as opposed to where, a traditional, insider trading case may be somebody sending an email to somebody to get them in, and then somebody proves the email in court, and like.
yeah, it's unprovable. It's all ambiguous. So you talked about proof of work. So a lot of the Bitcoin guys will tell me that Bitcoin incentivizes to make the energy cheap, to make it green, to do all these things. What do you think about like layer 2 solutions? Do you think there is a chance for Bitcoin if they evolve?
There's a fundamental flaw in the proof of work system for how they're mining the Bitcoin in the first place. So you need to remember, every single time a block is formed, only the miner that was able to crack the hash is able to get the block. And there's some other incentives around fees and such, so where other miners can get the fees. But it really comes down to who has the biggest computational unit. So if you're not competitive, and I mean by competitive, I mean if you're not in the top 1% of computational power on the network, you will never like mine a single Bitcoin. And I guess you could say you're supporting the network, because I wouldn't say you wouldn't mine a single Bitcoin. You could potentially mine something, because there's no impossibility. It's just the probability of being able to mine some gets less and less the more processing power that's allocated to another mining pool. But yeah, the biggest problem is primarily the scaling. But the biggest thing that a lot of Bitcoin people don't really want to talk about is, although you want to talk about having layer 2 solutions to help with off-chain payments or faster payments, that fundamental flaw of, let's say we had 10 nodes operating, and the one node or the last 3 nodes are the biggest nodes on the network. They're huge, giant mining pools. So they mine all the Bitcoin all the time. So all these nodes are operating all the time, but it's the last 3 nodes that are getting the reward for all the energy going into the network. Well, that means the last 7 nodes are wasting their energy no matter what layer 2 solution you put on top of there. You see what I mean? It's almost like somebody saying like, "Oh, yeah, I understand we have, this big old truck that has like 4 miles to the gallon, right?" But then they say, "Oh, but what if we just like eco boosted or something? Or what if we made it into a hybrid?" And it's like, yeah, there's no amount of hybrid you're going to put on a 4 miles to the gallon truck that's going to make it like comparable to like a Prius, maybe you might be able to, improve it. Like I said, you might be able to get it to like 10 miles a gallon or, 11 or something, but it's the same deal with Bitcoin. You can make it a little bit better, but that fundamental flaw is not going to make it competitive.
Okay. Well, one of the somebody that I talked to has said that we like to compare consensus algorithms, and he said that with proof of work, not so much with Bitcoin, but with the proof of work system, anyone in the world could participate in the network and kind of contribute to the decentralization and still earn income from that. So I get why it would be a really good way to decentralize a network.
That's actually not true. And you want to know why that's not true?
Okay.
Would you start a Bitcoin node?
No, I wouldn't.
And why wouldn't you? I mean, outside of not owning it, but like, do you think you'd be able to mine a single Bitcoin? Like,
well, no, I'm saying like for other blockchains, like let's say like Monero or something that
I understand that too, but they have the same problem, and it's honestly, I have way more of a conviction against proof of work than proof of stake, because proof of stake has quite a bit of a dynamic layer to it. But it's that there's a lot of waste, and a lot of people don't like to measure the waste, but it's one of those things where why don't you just like start participating in the network and just start realizing how much waste there is. Like, and it's like, the reason I say that is I love the technology. I started up a XRP node, and I started up a Corda node, and originally I was going to set up an ETH node until I realized, wow, I can't run these in the cloud because it'd just be expensive. So I'm like ridiculously expensive. So I'm like, wow, that's kind of interesting. Like, and my first thought was, because I'm thinking like from sort of a application standpoint, if I want to build applications on something like this, and there's just so much power being used, and I'm not really getting that, like, I'm not really getting any extra value from the power being used on this platform than I am on another platform that I could basically do the same thing with. So it got me sort of like in this way where I'm like, why is that? Like, because I'm sort of looking at it from a value proposition. Like, if I'm going to run a node and I'm going to operate on it and build apps on it, it sort of needs to make sense to do so. And if it's just super expensive just to have it running idle, it seems almost silly. And like, that's where this another thing that comes into with people trying to claim this green energy stuff with Bitcoin and proof of work. It literally makes no sense. It literally makes no sense. I guarantee you, make a Bitcoin node and have it run off of green energy. I challenge anybody to go do that. And people may go, oh, the freaking volcano and wherever that was, or they may go, oh, this instance here. And you can't go for isolated incidents. It has to be scalable. If you want to say it operates off green energy, then anybody's got to be able to do it if you're going to claim it's as decentralized as you want. Otherwise, it's going to be a more and more centralized network with a bunch of other people that are just sitting on the network, losing money, not really doing anything. And like I said, I think there's going to be a wall with this because, like I said, the scaling problem is an exponential problem, and there's no ceiling for it. So it's just going to keep getting more and more expensive, keep becoming more and more energy intensive, and it's the main reason why you can't mine Bitcoin or you can't mine or be competitive in mining Bitcoin on your laptop anymore than you would have in 2009 or 2010. And that's the thing. Okay, then scale that up now. If you could mine Bitcoin on your laptop in 2009 and now it requires a supercomputer, then what's it going to take in 2029? Like, like this is
a computer or something.
Yeah, something. It gets ridiculous. It gets so insane. And just from like a value proposition standpoint, I just can't like legitimize the energy or money spent to really develop on these platforms that I find are incredibly wasteful when there are other more efficient platforms to do relatively the same thing, but they offer a lot more other features that I'm able to be able to integrate with. And I like Ethereum. I think Ethereum being able to move from proof of work to proof of stake really shows the ability of the Ethereum developers and the Ethereum community to be very dynamic. So I think that is awesome. But I think Bitcoin doesn't have that at all. I don't think Bitcoin can really change to anything else. Even if, and it's one of those things where maybe if it had a better community centered around it, or maybe if it had a more like flourishing developer community. And I know there are people that do things on it, but it doesn't seem like it has the same, really even the same level of granularity as Ethereum, even though it came out first. But it's one of those things where the scaling problem, unless somebody can come out with a straight face and tell me, yeah, I was, even though you're able to mine Bitcoin on a laptop in 2009 and you need a supercomputer now, I feel totally confident that we'll be able to mine it perfectly fine 10 years from now. It just sounds so absurd. And what I'm trying to get is like, for the average person that's like sort of like listening to this or doesn't really like understand like the scaling problem, just think about it. If you can mine it on a laptop a couple of years ago, and then now it takes giant server farms to be even competitive, like where does this go? It just keeps on going, and it gets more and more energy intensive. It gets more and more, and there's no amount of green energy. There's barely enough regular energy to try to manage these processes, and it becomes this weird. I don't know what's happening. I don't know if it's like something in the media or if people just don't want to talk about it. But a lot of it just doesn't come. It doesn't scale at all. It hasn't been able to scale. And the thing, if it has, it wouldn't have these problems now. It would be at the same level of functionality as it was in 2009, which was actually considerably really cheap to send Bitcoin because of how small the network was. So, and it didn't have the same delays or the same congestion that it has now. But yeah, there's serious problems to be had with proof of work, and that energy scaling problem is the number one. And I don't know why people make excuses for it or try to like say the green energy thing. It makes no sense. The green energy, it makes literally no sense. Like can someone tell me how much power Bitcoin uses in the average day? And can someone tell me how much power all of the green energy in the world produces in a single day? And please compare the two. And I will tell you, it'd probably look ridiculous. It'd probably look like, oh, according to the Bitcoin people, like 1/3 or 1/2 of all the, I'm telling you, it'd be something like that. It'd be something ridiculous to where it would be almost all the green energy is running the Bitcoin network if Bitcoin's running off green energy. Like,
Yeah, they're like you said, the Ethereum people are willing to adapt, while the Bitcoin people are just very stuck in their ways. So is there like, from what I understand, proof of work is just prime factoring, and there's really no point to prime factor. It's like a boring math equation. Is there a math equation that would make it worth its while, like trying to crack a genome or something absurd that would actually do something of benefit?
so in a proof of work system, I think, I think what happened and what people want to happen aren't really the same thing. So what happened was with Bitcoin, it really proved the idea that you can create a digital object that can't be replicated. And that was the idea it proved. Boom, it did that. Now, just because it can prove that idea doesn't mean it can prove it could be a functional digital asset that can operate. Like, no matter like what the price of Bitcoin or how inefficient Bitcoin is, it will still be able to have that. It will still be able to have that layer of being able not to be able to replicate the object. That concept is down, but there are just so many other things that bog it down to make it a functional payment means, or even a proof of or store of value. Like, I think it's so silly that people talk about Bitcoin being a store of value, because a real store of value would, well, one, maintain its value, but really have a constant demand. So you wouldn't see these ridiculous like bull market, bear market bubbles all over the place. Usually, like it would, and don't get me wrong, it's not that it wouldn't have its bull markets or its bear markets. It's just that they wouldn't be as so violent. And this thing, like, I've gone down the rabbit hole, and I make jokes on my channel about this, about milk derivatives. But I would say milk derivatives are a better store of value than gold or Bitcoin, because it has a constant mean demand of people constantly buying products based off of it. It maintains its value because of that mean demand. It's not as liquid, but if it was, like, you could essentially maintain a good portion of your wealth in something that will constantly have demand. And primarily, the only time anything about the price changes is either something in supply chain or something in overall demand, either people buying more products or buying less products. But the whole thing is if you want something to be a store of value, it has to actually store value, which means it has to have a constant demand. And I don't think Bitcoin does that well either. I think people just keep saying that because they want that to be true. And it's one of those things where, and you can sort of see that to not be true, because no one would ever sell their Bitcoin. You know, if you have a store of value, you do want to redeem the value. Like, if you have an overall investment, you may not redeem the value because you plan on investing in it later. So, and I don't really think any of the cryptos can be looked at as a store of value yet, because you need a constant demand. And I don't think, it's not that they have volatility. It's just that the volatility is almost entirely dictated off of people freely buying and selling the token. So it's not like that general demand is determining the overall value and the constant value. It's just how people feel that day. So there's just a bunch of little things that when it comes down to it, just seems like more narratives than anything else. And you may notice this too, because these narratives only come around in bull markets. No one gives a shit about any of this in bear markets. It almost seems like even the Bitcoin people are just whatever. Like, it doesn't seem like the same narratives are propagated during the bear markets, which, if it was a store of value, like, you can say what you want about the gold people, but the gold people, from the time like they became gold people to the time they die, will always say gold's a store of value, up, down, left, right, whatever. Like, you don't need a gold bull market for gold people to tell you to buy gold. And I'm not saying that makes gold automatically a store of value. I'm just saying the overall like belief in it from the people that hold it actually believe in it to actually be that case. And people that hold gold I wouldn't say won't mind liquidating their gold, but they're not ones to go, I would never liquidate my gold. Like, they'll buy, like, homes or property or, goods with their gold and, manage their assets. And you don't see that with Bitcoin at all. So people aren't even really treating it as a store of value. They're more of just treating it as just a hodl asset, like any other, like no different than really a stock or it's just an overall investment or speculative bet for a future return. And we all know this, like, this is kind of how the space works. But yeah, I don't think any of the tokens are a store of value. I think one thing you'll be able to do with tokens is you'll be able to use the nominal value of the token to issue assets of supplement value. I think you'll be able to do that, and that will be a sort of a store of value relationship. But I don't think any of the tokens that are floating around in the crypto space are themselves a store of value until they're able to get a mean demand and level off based off that mean demand, which means that no matter what happens, that there will always be people that are coming in to buy, and there will always be people that are constantly coming in to use. So
Okay. So some of the other consensus algorithms, is there one that you favor over the others? So is Federated Byzantine agreement the most decentralized way, or is it just have the most benefits compared to some of the other ones?
no, I think they all have different features with different benefits to them. And I think there are different ways. It's one of those things where there's not really one way to get consensus. It's more of, and there's not even really a best way to get consensus. There may be a best way to get a certain feature or performance out, whether that performance is speed, or whether that performance is privacy, or whether that performance is smart contracts with a series of incentives around them. They all have certain features to them. So it's like it's not even like apples to oranges. It's almost like you got a basket of fruit, and some of the fruit is like good fruit, like you'll like it. Some of the fruit is not so good fruit, but it's really hard to compare them. You know, you can say they're all fruit, and you could say, oh, these two are the same color and they're roughly the same size and roughly the same texture, but they're just so fundamentally different. That it's hard to just go like, this one's better than this one's better than this one. Now it's easy to go, yeah, I don't think I would ever want to be on this one because it smells bad. But it's hard to go, this one's straight up better than this one because they may have two different use cases, where the one that may sort of be the bad one may not necessarily have any use case, or may just be inferior to others that have similar use cases that are better.
Okay. What about like, do you think Interledger is going to be a standard in the future for interoperability, or is it just something that something else could take over, like Quant, for example?
I think it's a contender. It's something that we're going to see. I think it's something to be aware of, because I think no matter what happens, just any sort of interledger framework as a whole that can build these different blockchains to be able to be interoperable with each other is going to be it's a bigger problem than the trillions of dollars that people like to spout for their tokens type of problem, because you got to remember these different ecosystems are going to be silos. So I think we're looking at multi-trillion-dollar problems that could be solved by adding interledger framework or frameworks similar that add just an interledger layer to the interoperability between different platforms or blockchains.
Is there any project that you're working on that you can talk about?
Yeah. One project, I guess I'll talk about, I spoke about Wall App on Crypto Eerie, but I guess I'll talk a little bit about, I'm working on and this isn't something I'm working on for my job or anything. This is actually an add-on to this is actually the payment layer of my startup app I was talking about with Crypto Eerie. But it's called the Coinbank Phantom Ledger. And basically what it is, it's a series of smart contracts that I call a contract book that operate on the Corda blockchain that can essentially, and sort of look at it this way, right? Now imagine you had a smart contract that had a bunch of different addresses for different cryptos in that smart contract. And then you had a way to sign that smart contract. And then you could essentially use that smart contract to be able to jump in and out of those different currencies by being able to sync your smart contract with basically a distributed ledger or distributed pool of other smart contracts. And then you could hold the representation of the value that's in those smart contracts by holding these tokens, even though the value is constantly being shared with all the members on the network. And then you could use those tokens as final settlement tokens to redeem any underlying asset that's attributed to this contract book network of different coin banks that are associated.
Okay. Are there investments that you're interested outside of crypto right now, since we have the whole inflation dynamic coming about, or deflationary attacks, or anything outside of crypto that you're looking at?
I've been a bit of a gold bug lately, mostly because I think gold, it's sort of weird. I think gold really is the only real money, and not for the way people think it is. Money is just a financial instrument, and gold just has all the attributes of a good financial instrument to manage value. And it's mostly because it's fungible, it can't be replicated. It's naturally mined. So they're really like, and people like to associate these with other things. But I think the biggest thing that gets gold is because it's always had a constant demand throughout history from people relieving some other form of value for that gold, whether it's for luxury, jewelry, whatever it may be. I think it's kind of almost cooked into like how humans operate and how we almost it's almost like our need for pretty things almost created a perfect demand set for an object that can act as money. And I don't think it's just jewelry, because you see it used in medical technologies, you see it used in electronics. But I think for the longest bit of history, it's sort of been that luxury good, and that's part of the reason why it's been able to maintain its value. Because every single person that's born or dies could look at something as a luxury good, and gold just seems to be the most popular one. So it builds that demand. It has that constant base of people constantly living and dying that are always using it. And I think the big thing people think is that it's not used for anything, but it's literally just the mere fact that it's that instrument. It's almost like a mixture between there are these other use cases for it, but there's this instrument involved, or there's a level of structure to how to manage gold as an instrument that allows it to be a good financial instrument, as opposed to like fiat currency, or as opposed to like kind of these just different contrived financial instruments that we just create out of thin air with our banking system. And we sort of created a contrived way of how we use gold, but it's that constant demand that made it good money. And I think that's really the only thing that makes something good money, is that's why I say the milk derivatives thing. It has a constant demand, and it's able to maintain its price with that constant demand. And there's really a really little chance that there could possibly be a drop in demand or a drop in, I mean, it doesn't mean that's not the case at all. Anything could happen, but it has a pretty solid demand base to where it's able to maintain its value. That's why I make the joke with milk derivatives and such. And if you actually look at the history of money, it's actually quite interesting. The first little bits of fiat money weren't actually backed by gold, but they were backed by grain, because you could just go take that dollar and redeem it for grain, and you would have like food to eat. And this is, not very technical times, but in the first creation of fiat money, you were actually able to redeem that for grain, because it had that constant demand that people got to eat. And it made good money because of that. Now, obviously, we've grown out of that. Once you became more industrial and people are able to actually get their needs met, you need something a bit more structured. But the mere fact that they just use grain as that same instrument that they use gold and that they use fiat now just shows you how much of it's almost like a social construct financial instrument that money is, but it needs certain properties to operate really well.
Yeah, I'm more of a silver investor, and I've been just looking at all the industrial applications.
Silver's the same way too. Silver, yeah. I think the only thing difference between gold and silver is silver is a bit more abundant, but I think silver has more use cases. So
yeah, it's really like in a lot of the electric cars and solar panels and everything. So I really see a push for the green energy happening. So it's kind of where I'm trying to put all my money, is just for energy conservation, just sectors that would benefit from that. I think the central banks are just going to target their inflation for renewable energy and green energy. So it's something I'm setting up. But so where can everyone follow you on Twitter and YouTube? How do we find more information?
Yeah. So I was going to ask if you could put this in your description box. But you could follow me at Quincy Chillbro on Twitter, or you could follow me at Coin Club Crypto on YouTube. And yeah, if you could drop those in your description, that'd be pretty awesome.
Yeah, I'll drop them in. I'll put a link in the description for everyone. I'll put his Twitter handle, and I'll add his YouTube link as well. And I'll tag you on Twitter and YouTube when I share the video as well.
Awesome. That'd be awesome.
Is there anything that you want to talk about that I didn't cover?
I guess one thing I do want to say in general is it's a good way to go about this. I think, okay, I guess this is the best way I could put it for this. So a lot of people like have been blowing me up, asking me for like financial advice, or what token do you think would go higher? Or what token do you think would be the one? Or if you could choose one, which one do you choose? And like one big thing I need to tell people, and people really need to get this, because like this is where I like differ between a lot of the people that like get hyped about like the price of these tokens. I'm more of a believer of, if you believe in the technology, first off, you can't really go wrong. And if you do, you'll be the first to know, because you believe in the technology, you're following everything, you know what's going on. So if something were to go wrong, you'd be the first to know before the regular person out, out on the street that may have, bought the coin was to know. So where does that leave me with all of this? It's mostly find the technology that you believe in. You cold-hearted, doesn't matter what anybody says about it. It doesn't matter what your favorite YouTuber does. It doesn't matter what your friends say. It matters how you feel about the technology as a whole. And with that said, because this isn't just blindly jumping into any technology just to grab hodl and cross your fingers, but go to the documentation pages of these technologies. So anything that we do in software development, we immediately go to the documentation pages, basically outlining everything that has to do with the features, the APIs, the SDKs, the structures involved for how the technology works. And all these different platforms have or all these different blockchains have a documentation page where you can go. It can be a PDF, or it could be a simple documentation page where they have the different features and you can click on them, or it could be a full-blown website with all the different intricacies. But go to the documentation and read from the horse's mouth, directly from the people who created these platforms, about how these platforms work, what you can do with them. That's where, if you look in the description box of my crypto feature videos, and more so of those videos than the other ones, because the other ones are more conceptual, but my crypto features videos, and in every single one of them, I dropped the link for the page in the documentation that talks about one of the things I was talking about. And everything that you need, that can tell you everything you need to know about all these technologies, are right there in the documentation for these technologies. So all you need to type in is whatever token or whatever blockchain you're looking for, and documentation, whether that's XRP, Ethereum, even Bitcoin. And this is more than just the white paper, because the white paper is more of a summary of the technology, where the documentation is that it's that underlying layer explaining everything. So the white paper would be sort of an introductory to the technology, or the documentation would be the side-by-side, feature-by-feature explanation of how the technology works, what it can integrate with, and it'll tell you everything. If it's not in the documentation, then it's sort of up in the air of whether you can do it or not. And that's sort of a developer standpoint. Because if I don't find it in the documentation, I'm like, well, looks like I'm building something new today, because there's nothing outlining that this is capable or not. So everything that you need to know that is out there in public that is capable for these platforms are directly in the documentation of the platforms that you believe in. And then once you've been able to get a chance to really, really get an understanding, and you don't have to be like a super tech whiz to be able to read some of these things. It's mostly just getting that general sense that these technologies are legitimate technologies. They have a legitimate use case. I can sort of get a general idea of how these can be used, and maybe even do your research on who's using them. But I think at the end of the day, like, you need to believe in the technology that you're investing in, because no one's going to tell you like what is or what isn't the right answer. They're only going to tell you what they think it is. So you have to rely on yourself. Now, I'm only here to give you the information. I have my coins. I like them. I'll tell you that I like them, but I'm here just to give you flat out information and whatever you want. And you go ahead and you pick what you want. Like, it's all on the individual. And I think that's what's really going to separate a lot of smart investors from just the typical retail, because I think the smart investors will know, well, a lot of the stuff that we see on the daily when it comes to price and it comes to just, Twitter news and YouTube news, a lot of that is just nothing in comparison to how these technologies are being adopted in the broad landscape of things. So with that mentality in hand, you're knowing that you're believing in the future use cases of these technologies. So there's no need to be worried about short-term volatility and such.
Yeah, I know a lot of people, like even myself, when I first got into crypto, I would kind of look at cryptos like stocks and kind of try to analyze them as a stock, but there's a lot more to the equation than just, what partnerships they have. Everything matters. The tokenomics, on-chain analysis, just how everything works together, and why would anyone even want to build off of something that works off of that token. So I understand what you're saying. I have a suggestion for your channel for
Really?
some of these technical details with like using the XRP escrow or setting up a node, that type of stuff. If you just did like little how-tos, how to use the escrow, I would be looking for that constantly. I know
Really?
I bought a coin from somebody, but there was no market for it, so I had to go directly to the miner, and we used XRP for the transaction. But that would have been like the perfect use case for the escrow. It's like once but I just
Yeah.
didn't know how to do it, so I didn't do it. I just kind of sent them the money first. So
I'm glad you said that. You're actually the third person to tell me that today, about just how to's, not even too technical, but just kind of like what's possible, you know?
yeah, it's I mean, there's a useful technology under this. Instead of just holding it, we could be actually doing something with it. So that's
Yeah, I tried to tell people that all the time, that a lot of people like try to find different places to stake their crypto or find different places to whatever. And there are actually very simple things that you could find yourself that you can do to make money with the crypto. Now, it gets a bit more technical, but it's something to really think about, because I don't think it's as hard as people truly believe that it is. And maybe that's just my own bias, but um, I think a lot of the technology is really spelled out there, and there's a lot of resources out there to really get down and dirty with some of these. And yeah, you can literally use the technologies to make money with the technology. So why trust anybody else to? And that's kind of my big issue with staking. I didn't really go over it in this video, but it's one of those things where if you're moving into a trustless society, or at least a trustless system, why are you going back into trusting someone who's like a bank but doesn't have any of the assurance that a bank would have? And it becomes this weird thing of, yeah, well, look at the returns. And there's kind of a whole thing with DeFi, where DeFi has been imploding with stuff like that. But there are ways you can make money with your crypto, because that's how these things are used. They're used to run processes. And I think it's kind of silly that we're moving out of the banking system to, I'm moving to staking my crypto with somebody for a return, almost like it's the banking system again. Like,
so you think DeFi is not exactly trustless? Why
no. I think a good portion of the DeFi space has a lot of like just bullshit projects in it. I think DeFi itself could be quite interesting, but it's one of those things where I think a lot of people, like I said, moved away from like the overall general technological uses of it. And that's why I say staking, because I think staking has been used as a cop out for people trying to pull up their own like not quite arbitrage pools, but it seems like there's a lot of that going on than there is actual trying to create staking nodes. And this is where you get a lot of these implosions, and this is where you get a lot of these just shisty figures popping up. And I just think it's silly that we just moved from like basically trying to move away from banks just to move on to shiestier banks. And that's not the case for all staking. There are certain staking methods where you can stake individually and you don't have to go through a staking pool, and that's interesting. But it's just one of those things where instead of looking at it purely like a financial asset, you almost got to look at it as a fundamental tool to a broader technology that's going to drive innovation and enterprise in the future.
Okay, yeah, it's a good way to look at it. One last question about synthetics. What are your thoughts on just synthetic cryptos in general? Is this another area where it's kind of like we're moving back to a derivatives type market, or do you think there's something to synthetics?
I've never heard the term synthetics, but are synthetics just issued almost
like Mirror, for example, will have an Apple stock that has an Oracle price feeding into the token, but there's no underlying asset to redeem it for. It's just a token that's pegged to Apple stock.
See, I don't know what the validity of something like. I think that's gonna sound like a nightmare in terms of SEC and regulations. Just because some of the projects I'm working on, even when it comes to issuing securities on XRP, like my firm here, we're trying to like really tiptoe on what it means to deal with the securities on these platforms. So something like that already sounds like it's going to be an absolute regulatory nightmare to deal with that. And it mostly has to do with, if there's no underlying asset, it comes down to the possession of who possesses it. And then if you're calling it an Apple stock and it's not an Apple stock and you're treating it like an Apple stock, it's literally the whole unregistered securities thing. But yeah, so that alone, and I've heard of stuff like that, but I do think there will be in general a good there will be a broader derivatives markets where those assets are pegged to some sort of, and it's not even that they're really pegged, it's just that the overall what's a good way to put it? The overall acceptance of this idea of value is accepted on a new platform. So 100 years ago, if you bought a stock, you bought it in, there's a piece of paper out there for it. Now it's in a database, and in the future, it'll be on the blockchain. So it's just the different ways that you are legally recognizing certain financial instruments in a broader economy. I think that's going to be huge. But if there really isn't any, if it's this weird pseudo derivative, mirror derivative thing of, it's just a it's just a blank token operating at that price, it almost doesn't even make sense to me, because I'm like, well, are you just selling that token and acting like it's an Apple stock, or are you just like pairing the token price to an Apple stock and just like it's just weird thing where it's not even really an Apple stock. It's like a it's I don't know. There's something weird. There's something weird where I'm like, you may see something interesting like that in the future. I just don't think you'll see it in regards to secured. Like I think you might see something like that when it comes to like video game point systems. I think you may see something really interesting like that, where people can bring like broader outside assets and then have them represented in points and then redeeming those assets, whether it's currency or whether it's whatever, you know what I mean? I think you may see something interesting like that, where those underlying assets aren't really paired to anything, but like could be or something. But as a whole, synthetic assets already sound like a regulatory nightmare, at least a regulatory nightmare from the perspective of where I work now and how we would go about it. Because yeah, that sounds like a huge problem.
Yeah, I agree. But the idea behind it is to kind of give accessibility to everyone in the world so they can actually buy an Apple stock. So if you live somewhere else and you don't have access to the New York Stock Exchange, you'd be able to buy the token instead. So
there's stuff like that where you can do that when it comes to tokenized securities. And it's one of those things where if there was a piece of paper Apple stock that was in some file cabinet at the broker that was handling it, and then there was a derivative of that, and then they legally were audited for that, that stock that they had on hand, I think that would be absolutely huge for tokenizing securities. But I think there's going to be a lot of legal mumbo jumbo stacks of paperwork that deal with stuff like that. I think it will be internationally and globally accessible for payments and for transactions. But like I said, I think there's going to be a huge stack of paperwork before anybody gets around to doing something like that. And if I mean, I don't doubt that there are projects out there in the works now. So if someone's already gone through that, great. But I think that's kind of what's gonna end up being what happens, because yeah, it's one of those weird things of like, at the very least, when it comes to dealing with structured financial instruments, there's a lot of rules involved, and it seems as if like you're a big player, you can sort of break the rules. But if you're not even in the game at all, like almost kind of like how Ripple was, it seems like there's going to be a lot of hiccups as opposed to just don't do that,
Yeah, I agree. What about like just tokenized assets in general, just having everything tokenized? What kind of future do you see that as?
Yeah, I think we're going to see a lot of different things. I think you'll see everything tokenized, and it's mostly just a representation of value, digitally, as a digital representation. So I think you'll see everything tokenized, not just financial assets, but you'll see files tokenized to be able to prove who owns like digital. Like if you had a file, like a picture or whatever, right? I think that you may be able to create a token, not just of the picture, but of the original hash of not. It's so weird. It's not just of the picture, but it's almost like if you wanted to create a file or a folder or a collection of whatever it may be, and let's say it was for regulatory concerns, like let's say it's not a picture, but let's say it's your medical documents or whatever, right? I think being able to tokenize stuff like that solely to be able to use as an authenticative means to prove that you own the documents that are being presented will be a huge thing. So like I said, if you had medical documents, you can prove that you're you by comparing the token that you have, however you possess that token, and essentially being able to verify that. And there may be other third-party and intermediaries involved to be able to connect different hashes and different networks and smart contracts. But I think the big thing you'll end up seeing is you'll see this overall automation of everything and this tokenization of everything. Because if you can represent it as an object, you can represent it as a token, and all that token really just represents is a unique identity of ownership. And I think you'll see it for everything. Like it can be something as simple as a piece of software updated to the App Store. There may be a token of that software just to prove that the developers are the rightful owners of that. You see what I mean? Like stuff like that.
Yeah, just to prove that you have ownership of it, and then that branches off to, you can put smart contracts on it, kind of like rent your token, lease your token or whatever. So
I think one thing too is you'll see blockchain and decentralized ledger technology be used as the accounting mechanism for everything. So not even just like general business accounting, but you'll be seeing it used for taxes. You'll be seeing it used for just general calculations and like calculators in a sense. But I think accounting is going to have this major like renaissance of automation because of the structural integrity of how distributed ledger technologies work.
Well, with all the supply chain disruptions and everything happening, I'd make an excellent use case right now. Right?
Mm-hmm.
Well, thank you for coming on the show and educating everyone about the technicalities. I really enjoyed the conversation.
Thanks for having me. It's fun being on here.